Hello traders, this is Blake Morrow with ForexAnalytix, and I want to wish you a happy Easter holiday. For those of you that are celebrating, it is Easter for myself, and I'm going to be celebrating with my family here very shortly, so this is going to be a very quick video. But before I get started on just what to look out for this week, a couple key points I wanted to make before I head off to my holiday festivities. I wanted to mention that if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. So try it out. And once you do that, make sure you download the mobile app. And so this way you have all of our analysis at your fingertips, even while you're just trying us out. Download the apps and have it on your tablet, on your mobile phone, your iPhone, your Samsung, whatever you're using. Okay, so let's talk about the markets really fast. Once again, we are in some tight consolidations, and you can see this in the euro dollar. Now, unless we get above this 618 retracement, which is 113.50, the risk still is lower. And if we break below 111.80, that's when things get a little bit more dicier for the euro dollar. Do keep in mind the dollar index, and let's go over to the dollar index really fast. The dollar index is in a very tight, this is a wedge. You can see these highs, and that all comes in around, 97.80 is like the big key resistance zone up here, 97.80, and you can see we have these higher lows, which means it's a bullish wedge. If we break above 97.80, or you can just say 98 cents in the dollar index, it's a very bullish development. A break though below 96 would be a bearish development. We are edging towards the upper end of this bullish wedge, and I think the risk is that we do break higher. One of the things that I wanted to point out alongside with the dollar is that we have the equity markets. Let me find the S&P really fast. Where is the S&P? There it is. Okay. We have the S&P that's in an ascending wedge. Okay. And ascending wedges, as you have these higher highs, higher lows, but you can see the ascent of the lower trend line is greater than the one of the upper trend line. That makes it an ascending wedge. Now, ascending wedges, by definition, are bearish reversal patterns. That doesn't mean that we can't go higher. It's just they're more prone to moving lower. If I had to throw a percentage on it, I'd say there's a 60-65% chance that we break down, or a 30-35 or 35-40% chance that we break higher. Does that mean that we can't break higher? No, but it's prone to break down. And the risk here is that we have, maybe a big double top that's setting up. Now, the reason why I'm pointing this out is because if the S&P trades below 2865, 2870, that's the support right through here, then that means it's a bearish breakdown in the S&P, and that's when you get a more bullish move in the dollar, typically, at least against most currencies. Now, not all currencies, but most. Now, one of the things I wanted to bring up here is if you look at the daily sentiment index, and this is something that you hear me talk about every once in a while, but usually I'm more concerned when we're hitting extremes. You'll notice right here on the where is the S&P? S&P is at 83, but more importantly, the Nasdaq's at 91. That means it's an extreme reading. Extreme bullishness in the Nasdaq. Volatility is at 14, which is a pretty low, which means bearish sentiment is at an extreme. But what's really key, see the Swiss franc? It's at 6. Now, you don't get a reading below 10 or above 90 that often, and when you get that extreme, you got to start looking for reversals. Now, I did put up the US dollar Swiss franc here on my personal chart because I wanted to show you something. Now, it looked like we have a big breakout. This is a multi-year trend line breakout. You can see this multi-year trend line. See that right there? I'm moving it. Okay. So we tried to break it one time, then we failed. Then we're clearly in breakout territory. Now, one of the things about the Nasdaq, is the Nasdaq. Ugh, sorry, it is Easter Sunday for myself. I'm already thinking about food. So one thing about the Swiss franc is the Swiss franc is weakening, but it can strengthen if we get what we call risk aversion. So if stocks show some signs of weakness, next week because of these extreme readings, we could actually see some Swiss franc strength. Now, you look at a chart like this, and you can see how we have really pretty much stopped out a lot of shorts. Anybody who's short the dollar Swiss has probably gotten squeezed going into the end of last week. Lack of liquidity, just taking out some stops. I wouldn't be surprised if we make it a little bit higher in the dollar Swiss, maybe up towards 102, somewhere up here. And this is an 88% retracement up here around 102.15. You have 127% extension of this move. This last move lower comes in around 101.80 and change. That resistance up here probably will come into play, but more importantly is if the S&P starts to show some signs of weakness, you might get an actual reversal. The market's pretty efficient, and most of you know this, it's pretty efficient at stopping out as many people as possible before going in the direction it really wants to go. So in a case like this, we could have gotten a move stopping out everybody, then just to reverse, set up a longer term lower high, and then get a bigger reversal back down towards parity. I think that is a risk with the dollar Swiss, and that's something that myself, I was looking at playing it on the long side, and I did play it on the long side. Let me take that back. I played it on the long side on Friday on this breakout, and once I got the DSI numbers at the end of the week, I was like, I don't know if I really want to be short Swiss francs in this environment, because of where equities are at and so on. Now, there's a few things that are happening next week that I want to point out. First of all, it is Easter Monday. Easter holiday spans throughout the course of Good Friday here in the U.S. and a lot of Europe, but then Easter Monday is also celebrated in a lot of Europe and banks throughout the world. So liquidity is going to be fairly poor going into early next week. We do have some important data like Australian CPI. Matter of fact, let me talk a little bit about the Aussie dollar. The Aussie dollar, this also goes along with risk aversion. Notice how we had this triangle. You see this triangle? We were breaking out, in my opinion. I'll actually draw a little bit here for you guys. Here's the daily chart of the Aussie dollar, and you can see the black lines drawn through here. Had a triangle breakout, tried to break out, couldn't take out the 200-day moving average. Also see that resistance up here? Those are highs from February. We couldn't take that out. We couldn't take out the 200-day moving average. We slumped back below the triangle breakout. Now, one of the things I always like to tell people is a false breakout tends to lead to a breakdown, or a false breakdown leads to a breakout. So in other words, if we get a move higher and it fails, there's a risk that we break the other way hard. With stocks where they're at, if they start to weaken, you tend to get commodity currency weakness alongside of that. That means Australian dollar may be affected. You have Australian CPI on Tuesday. Okay. On Wednesday, we have the Bank of Canada rate decision, even though the market's not expecting the BOC to do anything. How about if they are maybe more dovish than normal, and then you get Canadian currency weakness? Well, if that happens, then the Aussie dollar may weaken in sympathy. Okay. So that's something to think about. And I think the Aussie dollar is at risk of a possible reversal. Because of this false breakout, could not take out the 200-day moving average, and we're back below that triangle, back into the triangle, excuse me. So that false breakout, it is a little concerning. A couple other things that are happening this week is we have durable goods orders on Thursday in the U.S. On Friday, we have advanced GDP numbers, which the market's going to be honed in on pretty carefully, looking at U.S. growth. We're going to be looking at those numbers real carefully on Friday. Also, I need to mention that the BOJ is meeting on Wednesday. Tends not to be a huge mover in the FX market, but if the BOJ starts altering monetary policy, obviously you have to pay attention to some of the yen pairs. But guys and gals, it is Easter weekend. I'm going to go celebrate with my family. I hope you have a great celebration with your family as well. But I wanted to make sure that we got you a video so you were prepared for next week. And if you found this video useful, entertaining, you love it, make sure you click the thumbs up button on the YouTube channel, because that makes us all feel better that you're enjoying these free videos that we put out for you. And make sure you do subscribe to our channel. This way you don't miss any of our great interviews that we do throughout the course of the week, especially with Dale. Dale Pinkert, our Forex Stop Hunter. If you follow him on Twitter, he's one of the best hosts out there, and he brings in some of the best minds in the market, and you don't want to miss any of those interviews. So and they are free, so but if you're not in front of your computer, you want to be able to listen to them whenever you can. So click the bell icon on the YouTube channel. This way you're notified when any new videos we upload for free are available. So guys and gals, my name is Blake Morrow. Happy Easter for those of you that celebrate, and for those of you that don't, I hope you're enjoying a great just a elongated weekend. And for those of you that are watching Game of Thrones, episode 2 is tonight. Enjoy it. Don't be bummed out that it's a little shorter than we thought. Enjoy it. Revel in it. All right, guys and gals, have a great remainder of your weekend. I'll see you tomorrow on the Face webinar. Have a great day.